We'll go to David Gura, NBC.
Mr. Chairman, thank you very much. No doubt you were paying attention when two of your predecessors were up on Capitol Hill just a few days ago answering some questions from lawmakers. And a question they each answered had to do with the continuation of these pandemic unemployment benefits. And something we've heard a lot is that they could be a disincentive to work. Both of them addressed that. I wonder if you would as well. And then as a follow-up, I wonder what you've learned about the degree to which this has led to a widening of the wealth gap in this country, the degree to which maybe people are experiencing two different kinds of pandemics here. Some are getting through this based on what they've saved and the jobs that they have. Others are really struggling to get by, and I wonder what additional role the Fed could have in sort of bridging that yawning gap.
So on your first question, I wouldn't want to be giving very detailed, specific advice on particular programs and the level they should be at and that kind of thing. I just will say the following, that, you know, this pandemic and its fallout really represents the biggest shock to the U.S. economy in living memory. We went from the lowest levels of employment we'd had in 50 years to the highest levels we've had in 90 years, and we did it in the space of 2 months. And I would say that the response from the fiscal authorities was strong, it was fast, it was broad, and appropriately so. And I think we are seeing the results of the earlier strong fiscal actions. When you see the spending that's happening, when you see small businesses staying in business, even though the economy hasn't fully, successfully, sustainably reopened yet in many places, you are seeing what happens with that money. And so in a broad sense, it's been well spent. It's kept people in their homes. It's kept businesses in business. And that's all a good thing. I think in the broad scheme of things, that there will be a need both for more support from us and from more fiscal policy. Fiscal policy is up to Congress. You see the ongoing discussions that they're having, and it suggests to me that there's that both sides they're wrangling over various provisions, but nonetheless believe that there is a need for some additional fiscal support. And the last thing I'll say is that if the expansion, even if the reopening goes well and many people go back to work, it's still going to take a fairly long time for the parts of the economy that involve lots of people getting together in close proximity. And that means that many of the people who were laid off from those industries, and that's restaurants, bars, hotels, public entertainment, all those places, travel and accommodation, many of those people are going to find it hard to can't go back to their old job. There won't be enough jobs for them. So I think those people are going to need support. I can't say what the exact level should be. It's not our role, but they're going to need support if they're to be able to pay their bills, to continue spending money, to remain in their current rental house or apartment, or a house if they own it. So I think there will be a need. In terms of inequality, really, so I think it's fair to say that the burdens of the pandemic have fallen on heavily. They've fallen on everyone, but they've fallen very heavily on people who work in the service industries in relatively low-paying jobs. So there was a figure that came out of some of our research that was that if you make $40,000 a year or less, then 40%. You had a 40% chance of losing your job in April and May. So it's falling very heavily on people who have the least financial wherewithal to bear that, and that happens to be heavily skewed to minorities and to women. So that's just what the pandemic is doing. In terms of what we're doing, what we're trying to do is create an environment in the financial markets and in the economy where those people have the best chance they can have to go back to work, to their old job or to a new job. That's really what we're doing. Everything we do is directed at that. And, I'll say one last thing on inequality. That is, inequality is an issue, has been a growing issue in our country and in our economy for 4 decades. And you see it has many faces. You see it in the relative flattening out of incomes for people in lower and middle incomes as compared to those at the top. You see it in low mobility, where the chances of moving up from the bottom to the middle or the top have declined and are lower than they are in other comparable wealthy countries. So it's a serious economic problem for the United States, but it's got underlying causes that are not related to monetary policy or to our response to the pandemic. Again, 4 decades of evidence suggests it's about globalization, it's about the flattening out of educational attainment in the United States compared to our other competitor countries. It's about technology advancing too. If you're on the wrong side of those forces, it's been your income has stagnated. So it's a critical problem for our society, but one that really falls mainly to fiscal policy and other policies. Our part of it is to push as hard as we can on our employment mandate while keeping price stability. We saw what happened to people at the lower end of the income spectrum late in the last expansion. It was the best labor market in 50 years, they told us. We saw that the biggest wage increases were going to people at the bottom end of the wage spectrum for the last couple of years of that 10-year, 8-month expansion. So a tight labor market is probably the best thing that the Fed can foster to go after that problem, which is a serious one.